everyone, and welcome to podcast series by Anderson Everything Tax. This is Harsha Jain, and I work in the capacity of tax manager with Anderson UAE.
Hi everyone, this is Amandeep here, and I work as a senior associate with Anderson in the UAE as well.
As most of you are aware that it's been 5 years since the introduction of VAT in the UAE, and we all have seen this region evolve as a more mature tax jurisdiction over these past 5 years. Despite it being 5 years, we still see a lot of amendments and clarification that keep coming in, that FTA keeps releasing, which at times changes the tax implication or at times just provide more clarity into the business scenarios. So today Aman and I would be picking up from one of the earlier podcasts that I did and was concerned around one of these major changes. So the recent public clarification that talks about the Emirates-wise reporting in relation to registrants who make supplies through electronic commerce medium. So Aman, as we already are aware that standard rated supplies, that is the supplies that are subject to VAT at 5%, are reported in the Emirate, where the suppliers, the taxable person's establishment that is most closely related to the supply is located.
Yeah.
So if I have to pick an example, suppose there's a company who has establishment in Dubai and Abu Dhabi, and they make supplies in all the 7 Emirates. In those cases, these companies were required to report supplies in the Emirate of Dubai and Abu Dhabi only. With effect from 1st July 2023, any registrant who is making supplies through electronic commerce medium and who exceed the threshold of 100 million dirhams, they are required to report their standard rated supplies in the Emirate where the recipient is located.
Yeah, so that seems about right, and it is a pretty significant change for quite a lot of the e-commerce companies that are present in the UAE. But I think we need to also pay attention towards the fact that these taxable people who engage in such e-commerce business or platforms, they need to maintain substantive documents to actually prove that these supplies were made in the Emirate that they're claiming them to be in. So I think we can either maintain that through delivery notes or electronic orders that were signed by the customer, which proves his location as well.
Absolutely right, Aman. I think as important it is to be compliant with the law, documentation is essential part to substantiate it, because when it comes to FT audit, documentation is what speaks for your compliance levels.
Definitely. And then I think it's also quite important that we pay attention towards certain undisclosed agencies, wherein the responsibility to disclose these specific sales in each individual emirate also could shift from the supplier to the e-commerce platform provider itself.
Right, definitely. Let's now deep dive a bit into what exactly electronic commerce medium is, because that is what is essential for a registrant to identify whether they are actually required to follow this amendment or not. Mm-hmm. So electronic commerce medium, what they've explained in the clarification is any medium such as a website, a portal, smart kiosk, a store in the metaverse, or any such program that facilitates supply of goods or services. So only when the supplies are made through these programs, these platforms, that is when those supplies will be considered in the threshold of 100 million dirhams.
Okay, so I think since we've covered the basics and the actual definition behind the e-commerce medium itself, are there any specific conditions that are to be used for these special rules?
Very good question, Aman, because another point that registrants would need to identify. In fact, clarification has explained this in a much elaborate way. So the first condition that is to be kept in mind is that the goods or services should be listed on the platform. So what exactly it means is that the individual price of these goods or services should be clearly visible on the platform for the consumer to make a well-informed decision. So that's of essential importance here. Let me take up an example where there are many retailers who just display their products on the platform without really displaying their prices because they just want to showcase their collection. So those kind of people do not get covered under this amendment.
Okay, now since we're talking about the first condition itself, what happens in case e-commerce platform provider sort of provides a QR code link to another website but for the product information?
logically they do not get covered under this amendment as well, because per se the platform itself is not displaying complete information for the supply to be made.
Cool, I see.
Yeah. If I move on to the second condition is that the consumer must be able to complete the order through these electronic commerce medium, regardless of payment being made from the portal or not.
Okay.
So it might very well be a cash on delivery order. It will still be covered if I can place the complete order through the medium.
So now, is it? Am I right in saying that in case a customer does not or sort of signs the contract offline or confirms the order from any other source except the e-com platform, that this condition would not be fulfilled?
Yeah, it does not. It does not get fulfilled. I can take up another example here. So there are many real estate websites where you can see all kind of real estates for buying and selling. But of course, in case of real estate, you need to execute another document, let's say an ijari or a sale or purchase agreement. So given that you need to enter into another agreement to complete this transaction, they still don't get covered under this amendment.
Okay, that's good to know. And I think now we move on to the third condition that was specified in the clarification, which sort of drops more information on the delivery location of the goods. Now, the third condition states that these goods, the delivery of these actual goods should be specified by the customer, right, to a location chosen by the customer, and shouldn't be rated to a location that is owned or operated by the supplier themselves.
Right. So let's, now that we've covered the conditions that relate to goods, let's just try to evaluate a scenario and figure out if that scenario falls into this amendment. We all know that retailers, the normal retailers that are selling small token items may usually get covered under these cases. But of late, we have seen a lot of other big token suppliers, such as car manufacturers, who have completely automated their process online, and you can complete the full transaction using the online mode. So what are your thoughts around it?
Yeah, that's a good example, Harsha. So as you discussed, all of these particular car manufacturers, a select few of them have moved towards automating the entire process. So say, for example, a customer can go onto the website, log into their accounts, look at the car details, the models, the options they want to put on. And as such, it helps them make an informed decision. Now, this would satisfy my condition number one, ideally. Right. Now, if I move on to my second condition, which is that once I've made the car order, I can then sign on the purchase orders, confirm the pickup of the car, everything on the e-commerce portal itself, such that I don't have to sign any terms or conditions outside of the commerce portal as well. Then moving on to the third condition, now once I have placed the order, I have the option to get it delivered to my address, which can be my personal address or my official address. In this particular case, the third condition should be fulfilled as well.
Yeah, right. But I think in many of the cases, even for retailers or for car manufacturers, there's also an option for the consumer to just pick up from the store or a designated location which is actually owned by the supplier. So I think in that case, this condition would not be fulfilled, and
most likely inferring it from the third condition itself, that the location cannot be operated or owned by the supplier.
Right.
And in case I do pick it up from their manufacturing warehouse or any other showroom they might have in the country, that should take me out of the third condition itself.
Looks like a lot of compliance for people to figure out. Yeah.
Then I think we move on to our fourth condition, which is catered towards services. So what this condition actually states is that the services that are supplied, or the right to enjoy or receive those services, should be done without any or minimal human intervention at most, right?
So just on at the top of my head, I could think of an example. Like there are so many universities who provide at times, university or even other education platforms that provide either live lectures or pre-recorded lectures. I think we need to do some assessment there as well.
Yep, that's right. So now we might have obviously multiple university courses upgrading from a bachelor's, your master's, or just simple educational labs for particular courses that are available to us through mobile phones and websites in our current time. But so there are two alternative thoughts to this, right? The first being that in case the course or the lecture is sort of pre-recorded and it's available to the customer at any point of time, at any point of day, that should ideally fulfill this condition, right? Because there is no human intervention as such. However, if you move to, say, a live course, or a live lecture. Now, there is someone sitting behind the camera recording in real time in front of you, right? And it is a particular date and time. So that ideally should not satisfy condition number 4 as well.
Makes sense.
Right. So I think since we've covered the special conditions and the basics of the clarification itself, how does a taxable person assess the requirement to follow these specific rules?
I think it's important that they also identify that what's a tax period when they're required to apply this. So the first assessment that will be required to be done would be for the period 1st January 22 to 31st December 22. So if you fall under the category of supplies, if you're making supplies through electronic commerce medium and your supplies made through these medium exceed 100 million dirham in the calendar year 22, then with effect from 1st July 23, that means any return that you're filing for a tax period beginning after 1st July 23 will have to follow this Emirates-wise reporting mechanism. And this assessment would need to be done on an yearly basis thereafter. So I'll give an example. Suppose your tax period is February to April. In that case, for every hour after the end of every calendar year, you'll do this assessment, and any year in which you satisfy the conditions, you will have to do this Emirates-wise reporting effective from February to April tax period.
So again, that's increased compliance for everyone involved.
So, Aman, now that we've discussed the time period, we have discussed the condition, could you just brief a bit about how the reporting mechanism would work here?
So basically, if a taxable person has sort of crossed the 100 million dirham threshold in your in the preceding year, which is 2022, they would be required to notify the FTA via way of a declaration. Right, the declaration should now be bifurcated between my e-commerce sales, my non-e-commerce sales, right? And now I think currently at the moment the FTA has not really specified the declaration format that needs to be followed, but I think that should be coming soon, much before the implementation date of 1st July 23. Now I think we can also touch base upon the obligations itself for the reporting period. Right now, if I've crossed the 100 million limit, say in 2022 itself, I have 18 months that I need to sort of follow these special rules, right? And in case I do pass the threshold after December 2022, then I'll have to report for 2 years on an ongoing basis.
All right. It's interesting. And just to build on to what you said, I think even after completion of 18 months or 2 years respectively, whichever case you fall into, you're also required to intimate FTA regarding the continuity of this amendment and whether you're required to continue to report on the basis of your recipient emirate.
Yes, definitely, Harsha, because we'll have to sort of continuously assess and reevaluate where we are, right, at the 100 million mark or not. And it's not that if we fall below the threshold, we don't notify the FTA. You are still required to notify the FTA that I am no longer following the special rule. Right, so this has to be looked at on a constant basis, and everyone should be ready for it as soon as possible.
Just to sum it up, I think prima facie it might appear as a very just change in reporting mechanism where there is no tax implication as such, because there's no change of rate or any such thing. But I think it has a much wider reach in terms of businesses that are operating on a larger level.
Yeah, definitely. I agree with that statement, because if you think about it, companies that are, widespread and they have thousands of transactions a day, preparing for this in 1 month is not going to be possible.
Definitely.
Right? It takes a lot of time investment. People are going to be involved. Your IT systems will change, accounting for all the changes. Now, if this is not done in time or thought about well in advance, this could always open up doors for penal consequences.
Definitely. Always have to be careful about the penal consequences.
They'd rather be safe than sorry.
Yeah, definitely. Thank you everyone for listening. I hope this was helpful. Please feel free to reach out to us in case of any tax related queries.
Yeah. Thank you everyone.